Welcome to Middle Class Matters. Business news in English from Dr CMA Alagesan on the CAG Audit Report 19 of 2023 on the scam of rupees 7,50,000 crore by Government of India in road projects under Bharatmala pariyojana BPP-I. Part number 27 continued. 5.4.1.8 Chittur Malavaram. Notice inviting tender for the project was floated on 25th January 2018. An appointed date was fixed as 8th January 2019, whereas detailed project report of the project was finalized on 18th May 2019, 4 months after fixation of appointed date. Even the final feasibility report for the project was submitted on 12th March 2018, that is more than 1.5 months of floating its notice inviting tender. Due to non-finalization of detailed project report before the project approval, awarding and fixing the appointed date, the project specifications and contractor scope of work could not be correctly defined, resulting in change of scope for value of 49.1 crore was approved on 27th April 2020 on account of requirement of site, that is construction of light vehicular underpass besides change in specification of a minor bridge including its span arrangement due to non-consideration of existing natural stream. MOTH did not furnish reply to audit observation. 5.4.1.9 Suryapet Kammam. The lead member of the bidding consortium had share of 74% in the consortium. The lead member did not fulfill the condition of request for proposal regarding experience of 5 years in construction works in highway sector, as the lead member never performed such construction works directly or indirectly as per the list of work submitted by the bidder. However, in support of its experience, it submitted along with the bid documents the experience certificates of some other company. That experience certificates too were in the field of power sector and not in highway construction sector. Moreover, certificate of chartered accountant regarding net worth required to be 304.33 crore was also not in the name of lead member but in the name of third party. However, NHAI, for no reasons on record, declared 20th February 2019 the bidder technically qualified, who later also emerged as the L1 bidder, to whom work was awarded on 8th March 2019 at bid project cost of rupees 1,566.30 crore. MORTH replied in April 2022 that NHAI has robust bid evaluation mechanism. The bids are evaluated by the Bid Evaluation Committee and approved by the competent authority. However, the specific audit observation in this case was being looked into and position would be intimated to audit in due course of time. MORTH in the exit conference stated that clarification in regard to highlighted issues would be provided to audit after review. Thus, many instances of irregularities in award of projects by implementing agencies were observed in violation of prescribed processes of tendering, viz. Selection of ineligible bidders who did not fulfill tender conditions, selection of ineligible bidders based on finalized falsified documents, and floating of notice inviting tender without preparation of detailed project report or based on inaccurate detailed project reports including consideration of old schedules of rates while framing estimates. Recommendation number 21. Anomalies in tendering and selection process of contractors or concessionaires should be investigated to fix responsibility on erring officials who fail to ensure due adherence to prescribed rules and guidelines. Recommendation number 22. In order to bring more transparency in bidding process, effort should be made to ensure online evaluation of bids by ensuring exhaustive use of e-tendering portal. A mechanism should be developed to embed most of the steps involved in evaluation of bids in the e-tendering application so as to have a secured and non-reputable digital trail of transactions. 5.4.2 Authority to enter into agreement. As per Section 16(1) of National Highways Authority of India Act 1988, subject to rules made by the central government in that behalf, function of NHAI was to develop, maintain and manage the national highways and any other highways vested in or entrusted to it by the government. However, audit while reviewing 66 sample projects observed that without the highways being entrusted to NHAI by government, in many instances, it was floating notice inviting tender, awarding projects, entering into agreement, and fixing appointed date for such highways as detailed below. Projects where agreements were entered without authority. 1. Chittur Mallavaram 2/8/2018. So various dates were given. MORTH accepted in April 2022 the facts of Kachwala Bhugal web case, while for other projects it did not furnish any reply. Besides being a procedural violation, the above also carried the risk and legal complications such as eventual non-entrustment of project stretch or entrustment with modified alignment, duplication or omission of repair and maintenance efforts, commitments by multiple agencies, that is on one hand by NHAI and on the other hand by state PWD and border road organization etc., who are responsible for development and maintenance of such stretches before entrustment to NHAI. 5.5 Goods and service tax impact on project estimation and payments thereof. Goods and Services Tax (GST) was introduced in India while Government of India Gazette notification dated 12th April 2017. The major objective of introduction of GST was to remove the cascading effect of various indirect taxes prevalent at that time: service tax, value-added tax, excise duty, central sales tax, etc. As per Clause 219 of Central Goods and Services Tax Act 2017, CGST Act 2017, the works contract has been defined as a contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration or commissioning of any immovable property within transfer of property in goods, whereas the goods or in some other form was involved in the execution of such contract. The rate of GST on works contract for development of highways has been fixed at 12%, that is 6% central GST and 6% state GST as per para 6A of Schedule 2 of the CGST Act 2017. The works contracts are treated as contracts for supply of services. As per CGST Act 2017, CGST paid at the time of procurement of goods and services for manufacturing any product or rendering any services, that is inputs used for manufacture or service, is allowed as deduction from GST payable by it in the end product or end services, that is output, which is termed as input tax credit. Audit while reviewing the National Highways project cost estimates put to tender observed the following. On test check basis, it was observed that in the case of EPC and HAM projects being implemented in NHAI, project estimates were being prepared after considering the GST on inputs used by contractor or concessionaires for construction of projects, that is 18% for bitumen and steel, 28% for cement and 5% on stone and quarry spalls, etc., without considering the input tax credit which would be availed by contractor or concessionaires later on while settling its GST liabilities. That is, in EPC projects test checked, it was observed that besides GST on inputs, GST at 12% was considered on the completion of the project, that is output stage. The cascading impact of taking GST twice in EPC projects was overestimation of the project's estimates. First impact was in the form of inclusion of GST on inputs in gross estimates, and second one in computation of 12% GST on output being computed on such gross estimates when these gross estimates already included GST on inputs also. Thirdly, contractors' profit margin ranging from 10% was being computed on gross estimate. Similarly, in case of HAM project, concessionaires' profit margin ranging from 10% to 25% was being computed on gross estimate, resulting in overestimation of the project cost. To that extent, an illustration on double impact of GST on EPC projects is illustrated below. Example pertaining to overlooking of GST. Cost of input A. Practice being adapted, amount in crores 80 crore. Correct way, amount in crores 80 crore. GST on input B. 10 crore not available, nil. Estimated project cost including GST on input 90 crore and 80 crore. Profit margin of the contractor 10 crore 8.89 crore. Estimated project cost 100 crore 88.89 crore. GST 12% 12 crore and 10.67 crore. Estimated project cost put to tender 112 crore and 99.56 crore. The higher estimation of project cost would have also resulted in denying fair opportunity all those bidders who could not participate in the bid due to their technical eligibility falling short of higher technical threshold capacity fixed because of higher project estimation. Though as per the CGST Act 2017, road projects constructed against consideration of annuity were exempted from GST since October 13, 2017, the Ministry of Finance, based on GST Council decision 12th May 2021, clarified 17th June 2021 that HAM projects were not exempted from GST. In furtherance to Ministry of Finance notification 17th June 2021, MORTH wired its office order dated 27th August 2021 issued a direction that GST on annuity payments to the concessionaires of the HAM projects whose bid due date was on or after 14th October 2017 but on or before 16th June 2021 was to be made under change of law. These directions were issued ignoring the fact that bid project cost for HAM project was always inclusive of GST. MORTH further clarified 27th August 2021 that for HAM projects whose bid date was on or after 14th October 2017 but on or before 16th June 2021, no GST was payable by implementing agencies on 40% construction support extended to HAM concessionaires. These directions were also issued in ignorance of the fact that GST at the rate of 12% on each milestone payment was already being paid to HAM concessionaires of these projects whose bid date was on or before 14th October 2017 but on or before 16th June 2021. On test check basis, audit observed that in case of 3 HAM projects, Paniyala Morola Bypass Pachuri Kalan, Package 1, Monobula Tanat and Kachpula Pohol whereby on 40% construction support for an amount of 1,388.12 crore for these HAM projects, GST had already been paid to the contractors before the office order dated 27th August 2021, and these milestone payments included an amount of 148.73 crore as GST paid to concessionaires. Similarly, in the case of another HAM project, Chittur Mallavaram, NHAI had already made the first milestone payment including GST of 14.88 crore before issuance of order dated 27th August 2021. Audit further observed that as MORTH was ignorant of the fact that milestone payment with GST were being already released to HAM concessionaires, it did not have any mechanism to adjust or recover this GST of 163.61 crore on milestone payments already released to HAM concessionaires. And audit further observed that concessionaire of 3 HAM projects, Paniyala, Motorola, Phase 1, Monobala, Tanto, Kochwala, Bhopal were also paid price adjustment of 10.41 crore on GST on output 12% amount of 148.37 crore, which they were not otherwise entitled to. Amount of 148.73 crore was the amount of GST on concession support extended by NHAA. However, concessionaire was not entitled for the same. As per MORTH clarification of 27th August 2021. Therefore, the concessionaire was also not entitled for any price adjustment on this GST amount. No mechanism was prescribed in the order dated MORTH dated 27th August 2021 to adjust or recover this price adjustment excess paid to the concessionaire. Please like the video, subscribe to the channel. Please share it to as many people as possible to know how our tax payments are being misused by the politicians and the executives in connivance with the contractors. Thanks for watching this.